really interesting session for you here today as well, to pick up some of those points and also look at where we see things heading. So super panel here. Just wanted to introduce, we've got Thomas Beyerle, who's Managing Director and Group Head of Research at Catella, Herman, who's Vice President, Head of Research at Mark, Tobias Schultheiß, who's Managing Partner for Blackbird Real Estate. And I know, Tobias, there seems to be an issue with the camera at the moment, but you will hopefully join us shortly, but we'll be able to hear your views anyway. And last but not least, Zoe Ellis-Moore, who's CEO and founder of Spaces to Places. Let's just start with some brief introductions. Thomas, let's start with you. Just a brief introduction of yourself and the company.
Well, my name is Thomas Beyerle. Always a little bit hard to explain what is the roots of that. It's southern part of Germany. Anyway, I'm Managing Director of Catella, which is a Swedish-based investment advisory company. I'm located in Frankfurt, so in the center of Europe, doing the research for the whole group as a service provider for the whole thing. So we are invested in real estate, fixed income, equity, and I'm happy to be here today.
Super, thanks very much. Herman.
Yes, Herman Cook, Head of Research at Mark Capital Management, until November last year known as Meyer Bergman, responsible for the research activities supporting Mark's investment strategy and acquisition process, based in London, and Mark's capital management strategy strongly focused on retail restructuring, last mile logistics, and urban residential.
Super, thanks very much. Zoe.
Hello, I'm Zoe Ellis-Moore, Spaces to Places. I'm very much focused on, I would say, marketing intelligence, and with the property sector. The one that I'm specifically focused on in the agency is the flexible office market, and really supporting clients with the transformation there and really bringing it to much more the branded side and placemaking side of businesses, but working out of London there. With quite a few different operators and investors in the sector.
Yeah, and I think that area is going to be one of the interesting ones, just in terms of how those trends then drive the investment side as well. And Tobias.
Yeah, hello everybody, and I'm very sorry that from my side you cannot see a picture of me, although I hope the content is more important. Yeah, I'm founder of Blackbird Real Estate, the company I founded some 10 years ago as a niche transaction advisory boutique. Today we have locations in Munich, Cologne, and Frankfurt, whereas the company is headquartered in Königstein, some 20 kilometers north of Frankfurt. Basically, we focus on three business lines. It's transaction advisory, mainly on sell-side advice. We do joint ventures and value-add developments with partners. And some 4 years ago, we started setting up our own buy and hold portfolio with small properties in small locations.
Super, thanks very much, Tobias. I just wanted to just to kick off with a general kind of question, which was, we're now a year in. It was in fact exactly a year ago that my daughter had to stop school and has only just gone back properly again. How do you compare March 2020 with March 2021? Let's start with you, Herman. Just, are there areas that have surprised you, whether that's with your own business or whether that's with, any data that you've seen coming through in the market?
Well, when looking back to March 2020, obviously COVID-19 invaded Europe. Nobody really knew what was happening. It grew faster than anticipated. So from one day to the other, offices closed down, universities closed down, schools closed down. So, we started working from home. The initial idea was that, okay, this lockdown, this period will take a few months, and by the summer everything will be over. So on the one hand, the view was relatively short term. On the other hand, in terms of economic trends and where we're heading to, I would say, it was almost a full standstill, and nobody knew what was really going to happen. So I think at that time we were thinking short term and with a very unclear view on the future. And of course, looking nowadays today, we're now March 2021. We are still, let's say, in a restricted environment, remote working. But I would say last year we have seen that, basically the business, the work, being able to do things remote, technically, etc., much more resilient and much more flexible, innovative than we expected, let's say, last year. Things moved on. And obviously, the economy, although we are not at the end of the tunnel yet, but obviously there is light, there is partial recovery. Many sectors adapted, although we also see many sectors really in deep trouble. But I have to say, impressed so far. Let's see it from the bright side, how adaptive and innovative we have been dealing with this current situation.
Yeah, it's interesting, isn't it? That adaptive side. I mean, certainly, February, March last year, we weren't expecting to really do any of these kinds of webinars. I mean, it wasn't.
We're here today,
and let alone having a full kind of virtual exhibition. So it's interesting just to see, and if anything, this year has been busier than I expected to be, despite the fact that I haven't been on a plane, which is extraordinary, and I have no idea how I managed to fit everything in before. Zoe, just from your point of view, I mean, I suppose, what have you seen as some of the differences between 2020 and 2021?
Yes, I think the big difference was pre-COVID, we had this simple equation, really simplifying it. It was like one employee, one desk, one office. And now that equation is totally thrown out the water. There isn't sort of any of those arrangements. I think if you now think about that one employee, that employee now has much more flexible working arrangements of what times they could have a staggered start times. We're seeing much more evolution of term-based working. So the whole structure of work's changed as well, and people really rethinking that. The desk now, we've definitely got a desk at home, as well as we have another desk somewhere else, and so that's evolving quite rapidly. The one office has changed, and the purpose of the office has changed. So the equation's got more confusing. Now we used to have that one hub office, much more wonder and wow factor of essential HQ, but seeing the real rise now of the local rise of suburbia. I think Instant Office's report was really interesting, of this near to home working there. And I'm seeing much more sort of club style sort of formats of offices coming about, and like-minded companies coming together. So that's changed locational strategy hugely, HR strategies and policies as well. So these are all the big sort of changes and more complexity, which is giving us all quality of life there.
Yeah, no, really interesting, I think. And I guess, Tobias, from your point of view, how do you see that switch over the last kind of 12 months, really?
Well, to be honest, last year at the same time, my expectation was like when the financial crisis was on its peak. I said to my wife, let's go on holiday for the next 6 months, because there won't happen anything. At least in our experience, the difference was the case. We had very, very lot of business to do. Say, on the one side, finishing deals we started, but on the other side also talking to clients and then convince them that now is the right time to sell the property, even though we have this uncertainty given the pandemic. And yes, there is still today we have uncertainty, but I have the strong feeling that tenants, but also investors, want to do business. They want to go back to the office and go to work. And therefore, at the bottom line, yes, we had a heavy decrease in turnover, letting wise and transaction volume wise, but fortunately it was not as bad as some 10, 12 years ago.
Interesting. And of course, if you've got questions, do please ask them on the right hand side of the screen that you're watching it on in the RealX platform there. You've got a Q&A button. You've also got a comment button. Feel free to put questions in the comments or the Q&A. I'll be monitoring those and pick those up so that we can also answer the questions that you've got as well. Thomas, feel free to pick up any of those points in terms of how you're seeing things over that 12-month window. But I also wanted to pick up a little bit on some of the sort of economic trends, which are also key, I guess, to how we see the market and investing as we move beyond the crisis. There's been a lot of discussion around inflation, particularly. So I suppose, what would be the implications of that? Because it's not really been, much of a comment in the market for a little while.
Well, good point, Richard. I think looking back, this is a natural phenomenon that we look back what happened the last 2 or 3 crises. We all survived, let's say. So looking in the textbooks, nobody made this experience how such big global money flow ever happened, by the way. So this was my first impression. This is different. Okay, always a good headline. But on the other hand, I think, and this comes more to the point, my first impressions were a little bit scared on the situation that within our, let's say, surveys and talking to clients and people, it seems by July, August, okay, it's the crisis of the other ones, industry, servers, but not real estate, never, no, definitely not. And this will surprise me totally, because on one hand, it's always easy to believe in the humanity of that, it's really the crisis of the other ones. But on the other hand, become especially in Q4 last year, becomes more and more a realistic thing, saying this, the figures always goes up, especially when it comes to residential and logistic, these things. The devaluation of retail were a foggy thing, no clear picture. But now I think in Q1, end of Q1, we see more on a sober situation that, of course, we are not the other ones. We are part of the whole situation, and the negative headlines will increase definitely. The question, and this is what really surprised me, the big drop doesn't happen right now, but you can see if you split up the real estate sector in each different boxes, you see, of course, a wide spectrum of resi is still good and far away from what we call crisis, generally speaking. On the other hand, everybody's punishing retail, which is also not true, by the way. So this is, again, the thing. So again, what we face now the next 4 to 6 weeks is negative headlines. Q figures will come out. Letting situation will go down between Finland and Madrid, which is normal, seeing the crisis on one hand. On the other hand, and this is again due to ECB stimulation packages, the kind of the horrible figures on insolvencies, which come now up in Q2 on a slightly increasing level, not a big rocket, but a slightly increasing level. And this, of course, will run the negative headlines. Positively speaking, I see the worst things are over, but on the other hand, I never feel such a, let's say, super efficiency environment. And this, of course, will trigger the future markets definitely within the next quarters. Yeah.
And Herman, I mean, what are you seeing in terms of, I suppose, the pick up that point around inflation, but also as governments and banks begin to unwind some of that fiscal stimulus, and we're then looking at what happens with the economies more general, and the shock perhaps begins to come in. I suppose, how do you see that in relation to the markets going forward?
Well, I mean, on the one hand, there is definitely some drive for inflation. We see commodity prices going up. Obviously, the massive support in the economy, the massive amount of capital coming into the economy to stimulate the economy, that probably will also have some upward drive on inflation. Simply the consumer going back to the high street. We have been restricted for 1 year, and let's hope that by summer we can do again many things. And obviously there will be a significant catch-up demand by people going on traveling, going out for dinner, buying things. So there will be some upward pressure on consumption. On the other hand, we have seen that also in the global financial crisis with the massive quantitative easing program, there was also a view that inflation would accelerate, would increase. Didn't happen. Also, when we look at Europe, when we see aging, we see a shift away from consumption of goods to more like sharing economy, consumption of experience. So there are also mechanisms basically moderating the inflation. So I think in that sense, the upward level of inflation, it will be there, but probably not at a dramatic level. And the same also when we look at the yields, the bond yields, there will be upward pressure. And of course, a risk for the real estate sector is that the yields are currently on historically low levels. But when we look at the yield gap between yields and, let's say, 10-year government bond yields, actually those yield gaps are pretty high. So in that sense, there is some space in the market to accommodate, let's say, a shift in bond yields and in inflation. But of course, like always in the real estate market, it's strongly linked to fundamentals. Being in good products, being on good locations, having good concepts, focusing on fundamentals, being in the good real estate, that will probably be the best shield to deal with the shift in the economy.
And
Okay.
isn't it the case that billions of bonds mature this year, and that money also has to be reinvested? And 10 years ago, these yields, I don't know, yielded 4 or 5%, and they will definitely not get this level again, which again will put pressure on real estate markets because there's new money coming
Absolutely.
to ours. Yeah.
Fully agree. I mean, there is so much capital in the market, and that's still looking for yields. And I don't see that changing in the short term.
Yeah, and that's the weird thing that, for example, last year we sold a bond-like property with a long-term government tenant, and we started negotiations 12 months ago. And I never thought that the price will remain the same given the pandemic, but at the end, the price went up over the negotiations, and it was the deal was closed end of last year, and the final price was almost 2 years rent higher compared to the level we started.
Yeah.
Wow, that's really interesting. I mean, and has anybody else seen that in terms of? I mean, Thomas, obviously, well, and Herman as well. Obviously, you know, you're seeing it from both the research side as well as what's coming through from the investment side. Is there that? Are you seeing any of those elements in terms of pricing? What's your? Let's pick up that point around pricing.
That's really a good thing, because what we've done the last 4 weeks is we try to compare the acquisition profiles from the investors, the big German funds, of course, insurance companies. They get more and more synchronized. CBD, development, CBD, and again CBD. So 10-year lease, so traditional supercore. And this is again where they are from 100 different companies, 99 looking for the same thing, which is a totally simple thing, which means prices get higher as long there are some biddings and there are market activities in what we call CBD or central locations. On the other hand, and this is again where it comes to these problem-solving scenarios from advisors, how to deal with a property 20 years old, lease comes to an end of next year. I wouldn't say at the edge of the city, what you do with that. And this again, where of course we will see some, I would say, refurbishment activities on one hand, but there the vacancy rate goes up, the prices go down, and this is, for me, it's much more a land gambling situation rather than focusing on the properties. It's provocatively speaking, of course. So our business is, of course, real estate and the buildings. But you also can see it when you talk to financing conglomerations. They say, Thomas, look, what we really try to avoid, we know we're bidding for the same thing, short list, long list, but what we do, we move now meanwhile more to these mixed-use schemes. So no 100% office might be not wrong, but let's go more on the secure thing, which is resi, office, Starbucks, the basement. So big picture, what we call the DNA of, I would say, urban restructuring thing becomes more and more, has to change our views on what is real estate for the time being. And this is again where, for me, this is an interesting thing, and I think it was Herman who already mentioned 250 basis point to a 10-year treasury bond. This is the promise we give. Whether it's retail or resi, it's not the question. For me, it's more the market really acts quite rational. So I don't really fear what we call the crisis outside. I see that different investors have a different view, but it's always not good when everybody is looking in the shop for the same product. Yeah. And this happened right now. But again, we see some slightly different. So I'm more confident with the situation. Last word compared to the Lehman case, of course, 11 years ago.
Good. And Zoe, I think you wanted to pick up that point around mixed use, did you?
Yes, seeing much more sort of that whole thought out placemaking is definitely on the increase. That I get really frustrated with hope marketing, and as you know, people build it and they will come sort of old school thinking, and very much really having to understand what's the local demographics, what's an area, all going back to the fundamentals. I think that we're seeing this even more, that you have to build the right product offering, whether that's hotels, whether it's offices, what's the right mix. But you need to know whether you're targeting a tech sector and, you know, the staffing of people living in that area and that, or is it creative hub? We're seeing different types of clusters, different types of lifestyles being created ever more now. And so, yeah, this is where the strength now of really creating a place and understanding those fundamentals of what makes a great place. We've all talked about it for ages, but it's even more important now. And that's what's going to make the difference between one location and another. And it's bringing together those local ecosystems as well. Sometimes, you have to think about who your neighbours are even more so now and how that influences an area. So it's exciting times, but I think the big one I've seen is much more the partnership approach. I think people are now realising gone are the days where it was much more top down and you would just create an iconic building. You've got to think much more about the grassroots level of what's happening.
Okay, good. I'm going to drill down into a couple of areas that I wanted to pick up on, and have also been picked up by Michelle Zalak from Channels in the Q&A here. Thanks very much. Good to see you. To capture the focus on opportunities presented by the megatrends, which of the following trends would you consider to give more priority above the other? Urbanization, technological change, medical, digital, last mile logistics, or urban mixed use, especially now that we've moved away from crisis management and focus more on future requirements, people, technology, and organization. Now, Michelle, that is quite a wide
one. It's missing. It's decarbonization. Sorry for that. Of course, urbanization, blah, blah, blah. But honestly speaking, and I don't want to insult nobody, but decarbonization, it's key. That simple thing. The rest, it's okay. The rest we have to solve. But decarbonization, I know that every day several calls on what do we do as Catella, what do our clients do? I can hear it, but we have to do it, honestly speaking. And this is again where for me this is the super mega trend beside digitalization, urbanization. Sorry for jumping in a little bit rough, but yeah.
Okay, Michelle, we will come to that question. I'm just going to explore a little bit more that decarbonisation side, because over the week there's been a lot of focus on ESG, particularly impact investment and the role that real estate has in that as a growing trend that has been accelerated by the crisis. So let's just pick up that ESG part a little bit, Herman. Also, what are you seeing from that point of view? Are you seeing also an increased focus on impact investment, on those things coming both from the occupiers, I suppose, but also from the capital?
Well, I would say essential. It's really a priority, and obviously when we look at decarbonization, we have seen in the previous years, particularly with BREEAM LEEDs, we have seen that new developments, new projects, new buildings, we are pretty good. We are pretty advanced in making them sustainable, making them durable, creating circular economic elements in them. But obviously, when we look at cities, when we look at urban cores, existing properties, existing buildings, those are the overwhelming majority. That's where the challenge is. So obviously, where there are opportunities for repurposing, where there are opportunities for repositioning, and that's obviously also from capital management, where we are really, where one of our focus point is. There we see the chance by repurposing, by repositioning, renewing the building, making the building basically decarbonized, making it ESG proof, environmentally proof, state of the art, that basically is ready for the forthcoming decades. So, and what we see is that both tenants and investors, they put a lot of priority on those. They ask questions on those. They put requirements on those. It becomes more and more difficult to defend not to be involved in decarbonization.
And Tobias, from your point of view, obviously looking at the German market there, and also looking at a variety of different asset classes and I guess non-core and core areas, how much of an issue do you think that is when you're looking, particularly in those sort of I guess more secondary cities?
It is an issue, and but I think this will become an opportunity in the future, because I see ESG is here to stay as the internet is, but what I don't see yet is some guidance for owners of smaller properties in those secondary locations. I see a lot of press articles. I know that Thomas and his team do a lot of research on ESG, but there's nothing you can provide to, say, non-professional owners of real estate to tell them, listen, this is something you have to do. They only hear about it. They thought, well, sustainable properties and some LEED and DGNB, whatever certificate, that doesn't apply for my building. But now they hear at some point they will be legally obliged, but nobody tells them what they have to do. So what we as Blackbird started at the beginning of this year is that we try to set up a checklist of what to do in order to make a property ESG compatible. And because that's what I'm missing in the market. All the big institutional investors, they have their teams, they have their lawyers and consultants, advisors to tell them what to do. But there's no guidance for smaller non-professional owners. On the one side, I see this as a threat, because that's the biggest group of owners in Germany. But on the other side, I see this as an opportunity for investors who are willing to invest in smaller properties, because a lot of them will not be willing or not be able to convert their existing building into an ESG compatible building.
And what I'm noticing, I think that's really interesting, is that differentiation as well, where you've got different providers focusing on different areas. So I would say at Brentwood, an office provider there that also owns building, they're really provided on the real placemaking area. But then on the other hand, you've got somebody like X and Y are all about eco buildings, and their whole philosophy is about companies with purpose. And so they're offering real niche areas that people are buying into and want to stay with those brands as properties. And then even on the other hand, we've talked about technology. Inkyhive is a great provider in Hampshire that they're just focusing, they've even microchipped some of their customers and gone real to technology level, that they have offices without any staff now, and that the clients can walk in and just wave their hand to get in. So I'm seeing the polarization of really people deciding what their core is and focusing on that. And I think that's what's going to bring the vibrancy and change to this industry. And it's happening at grassroots level as well, which is exciting, by some of the smaller players really seizing these opportunities.
I think that's interesting, that area, Zoe, in terms of what's happening at that kind of occupier level and what people are aiming to do. Let's pick up a little bit on that future of the office side. Thomas, I suppose, what are you expecting to see? I mean, that's interesting, that idea around, the sort of almost staffless office in a way, and how that's being built. So what trends do you expect? There's been a lot of discussion around it, but what trends do you expect to stay, and which ones do you expect to kind of be forgotten?
I think, honestly speaking, the home working scheme or phenomenon will be within the next 2-3 years. I think it will be vanished as a buzzword, as home working. It's something between your own desk in your traditional office and something called co-working. But the sitting at home today, which is convenient, by the way, I think it's a more vanishing thing, because around 80% within Europe, they don't have a second room or a working room at home. So this is a natural thing. But on the other hand, I think what is for me the most, headline or homework, there are so many corporates outside, really big, mid-sized corporates, who ask for, and now what you do? We feel pressure by our employees. We feel pressure by our supervisory boards. We have long leases, contracts with some will be a break option end of next year. What should we do? And this again, where it's a big question mark, where of course we can advise. On the other hand, I think talking to the people, simple thing, we do the research between really Oulu, Finland and Madrid. It's a 3 out of 5, which means 3 days office, 2 days wherever, home or co-working space or whatever. But the 3-to-2 relationship, it's for me the super DNA for whole Europe. Wide spectrum between a dentist and a nurse and a fireworker, definitely. But I think this is again where there are the Monday to Friday thing. It's not gone, generally speaking, but it's under heavily pressure. And so we see with the next 4 to 5 years, what do the corporates really decide? There will be, of course, a big fat minus, definitely. The question is it 10 or 20%? Well, follow some headlines, but I think this is again 1/5. It's under negotiations for the next contract. This is again for me what I can say something more or less reasonable in this stage. The rest will be the figures coming up the next quarters and years, definitely.
Okay, good. Herman, do you want to pick that up? And also, let's try and pick up on some of the things that the question from Michelle as well. So, in terms of the mega trends, we've talked there a little bit about ESG, impact investment, but out of the ones mentioned there, so urbanization, technology change, medical, digital, last mile logistics, urban mixed use. I mean, I know those are all elements that or a lot of them are elements that Mark have been actively kind of looking at. So how do you see those?
Well, I mean, on the office to start with, I feel the office is there to stay. No doubt about it. When I hear my own colleagues, when I hear peers from other companies, I would say everybody is, counting days, looking forward to go back to the team, go back to the office, have, let's say, the creative moments in the office, brainstorming, innovation, etc. So, and I think home working, I fully agree with what Thomas already said. The word will in that sense vanish. And I think we will probably see patterns of people deciding to work at home 1 day, maybe 2 days, maybe even 3 days a week. But I think there will be, the office will stay the heart of companies. And I think that's not going to change. Linking that to urbanization, I think also looking to Europe, looking to the world in general, I would say core cities, dynamic cities, diverse economy, those will stay the drivers of economic growth. Those will stay the drivers of innovation. People need to congregate, people need to cluster, people need to meet, to come up with ideas, to create something. That will not change. So, and I think also in that sense, the core cities, the urbanization is one of the mega trends, and that will, I think, even further accelerate. What we may see, however, there was an interesting study also done by Green Street on, let's say, the urbanization versus suburbanization question, where one of the key findings was obviously that urbanization is there to stay and further accelerate. But some cities with high densities in the central areas, competitive land markets, high land prices, difficulties creating, let's say, COVID-proof, corona-proof, healthy environments, there may be a kind of, bundled deconcentration, kind of bundled suburbanization may happen, that you get within the given agglomeration more of a pattern of subcenters, where basically office concentrations will further grow, and a kind of deconcentration a little bit away from the prime CBD. And of course, likely cities to happen that are considered to be the largest cities, but obviously those are scenarios. We have to see what it comes up with. But I think the general picture is one: offices will be there to stay, and the urbanization trend is one to continue.
Okay, good. I'll pick up on some of those other sectors also later. And Tobias, in terms of the city side of things, Germany obviously polycentric in terms of the cities, and also, as you mentioned there, you've got a huge amount of industry which is more widely spread, just across the whole country. So do you see more of an opportunity in a way for growth in some of the smaller cities? How do you see that?
I absolutely do see this opportunity, because for example, when you take hotels, Blackbird, we are not hotel investors or advisors, but whether I'm in the city center of Frankfurt or in the city center of Limburg or Nordhorn or Gelsenkirchen, you name them, there's always the same thing. You see shut down hotels, and typically these hotels are owner owned by some family, and unfortunately my expectation is these families will suffer and may go insolvent. From a real estate perspective, this is an opportunity, because I can imagine that they will at some point either decide or be forced to sell their hotel, and they are usually very good located, so you can convert them from hotel use into some kind of resi, being normal resi, micro living, elderly living buildings. So yes, I do see opportunities there.
Okay, good. We had an interesting discussion actually yesterday on that sort of student housing, senior living, health side as well. particularly in terms of those opportunities. So interesting that you picked that up there, Tobias. And Thomas, from your point of view, let's look a little bit at that residential side as well. I mean, you mentioned that it's obviously much more challenging in terms of work from home. It's fine if you've got a nice big house and plenty of space and super broadband, but actually if you're younger and living in a one-bedroom flat, potentially with your partner and you're both trying to work from home without a balcony or an outside space, it's a little more challenging. So I suppose, how do you see that? Do you expect there to be changes in terms of what residential will look like, i.e. demand for slightly larger spaces? How does that work if everybody's going to be, transferring between the office and home working?
Well, I think you can answer the question just looking on the geography or spatial structure, which means no doubt the big thing is, of course, urbanization. So people go in the centers, the city centers and cities, wherever. On the other hand, of course, there was, especially when it comes to kind of, let's say, marriage and baby, then you see definitely with a relationship of, let's say, 9 out of 10, looking for something in the outskirts. This was, by the way, the last century we saw this was in the end of 60s, early 70s within whole Europe. So our parents moved out to the outskirts, let's say simple this, between Finland and Spain on one hand. On the other hand, I think this again comes really to a situation where I'm a little bit surprised that especially the younger generation, they try to stay in the city center in one flat apartment. They're mourning definitely, but on the other hand, they don't use a second car. So they use the opportunity and the efficiency and all these 24 hours activities in what we call cities on that. Again, I'm not the right person to answer that because I'm living in the outskirts, definitely. I grew up in the outskirts, so I'm not the guy from the city centers, but I have to see, and coming from our investment activities, there is a huge demand for what we called urban living thing, whether it's a student housing or whether it's a two-flat bedroom. On one hand, I think that next generation and the new constructions will come per capita less space, definitely. And maybe we, Richard, you and me, as middle-aged gentlemen, we see that a little bit, why so close together? On the other hand, for the other ones, for the demand side, obviously, this is the new DNA of the city, living in the city, not in the penthouse, but more in the middle. And this is, again, where I see that the density will increase dramatically. Otherwise, we're just looking also on Barcelona, the most densified city. ULI program, every big think tank launched these kind of how do we live the next 20, 40 years, and we all come to more skyscrapers, more densified situations, more let's say closer I'd say distance between shopping, consuming, living and working. And this obviously is the new DNA. I think Zoe already mentioned this point. For me, it's the totally restructuring shift of our city centers, plus the big effect of they live there, they don't commute out.
And it's the 15-minute city. I think that's the term that everybody's now sort of really saying about.
Absolutely. Very popular.
Yeah, and just in terms of the, we haven't spoken a lot about retail at the moment, and retail's obviously had huge negative sentiment and lots of concerns as well. I mean, the majority of the stories around shops closing, retail apocalypse has been the story for the last 5 years, really, almost. And, certainly if I'm looking to the UK, you're beginning to see, brands have disappeared, major brands have disappeared, and particularly the real estate aspect of that has disappeared with them. The brands have moved online. Interesting to see what our thoughts on that. Will we see a boost when we go back? When it's possible to be able to shop again? But also, is that transformation part of that? Because, interestingly, this week there was an announcement here in the UK that a shopping centre that was built in Coventry, I think only in 2008, so not that old, is being repurposed into residential. So is that something, Herman, how do you see that? And I'll come to you as well, Zoe, on that one.
Well, the retail transition is obviously going to accelerate because of COVID. When we look at retail in general, there are a few things. Obviously, the shift from physical retail into multi-channel retail online. Second, there is, of course, in a lot of European countries, and I think in the UK that problem is relatively big. That's the whole issue about pressure on the spending power among middle classes. Retail is traditionally and will always be a middle class thing. It's mass market, it's volume, it's a scale. So that of course is a major issue in a lot of economies. And then of course thirdly is also the multi-channel systems, communication, digitalization, increasing pressure on the profits of retailers. So those three elements are there to stay. Obviously, what we see in the transformation of retail, we see on the one hand, we see that happening. On the other hand, obviously, the need for people, the need for consumers, marketplaces, meeting places, heart of town, city center, that kind of identities where people can go, where people can discover, where people can meet, where people can be seen and look around. That kind of mechanisms are also there to stay. It's a constant feature of whatever city we are talking about. So I think that shift from shopping center to marketplace, that shift from retail to mixed use, where you have a palette, a mixture of functions, public functions, but also work functions, residential. I think that's there to continue. And looking to retail, obviously the key question is, and then it comes to operations of retail, it comes to the operations also of the real estate, new business models, new leasing models. Those stores obviously have a role for people, and they have a role for trade. And obviously what is important is that in terms of the business models of retail and retailers and investors, and related to that also the leasing models, to come up with a new system to accommodate the current today's role of the store in the real estate economy. That's going to be a key for retail. But retail, I'm convinced about that as a key element in the city, is there to stay.
Okay, good. Zoe, do you want to pick that up as well?
Yeah, I would exactly agree with Herman, but the only thing I would say I disagree with is retail's not here to stay. It's the terminology wrong. The retail word needs to change to experience. Those providers are now experience providers. I think that's where the difference is. Yeah. It's about having a hotel style lounge that you can go into like a shop. It's now about sort of your dog grooming there. It's about your spa. It's about your competitive socializing. It's less of the purchasing. That's the big difference that I just echo there.
Yeah, and
fully agree.
and from your point of view, Tobias, I mean, you mentioned there that hotels and transformation of that may be an opportunity. Is there a similar case for that, do you think, in terms of retail, or is there more of a different case in Germany? Is there more sort of food retail led or less e-commerce, and so therefore less of an issue?
Well, when I look at my family, I don't see less e-commerce, especially when I see the amounts of boxes delivered every day. I think with every hype, we're some years late or some years behind the United States. But although I dislike it, but e-commerce will definitely increase in Germany. And do I see opportunities in converting retail properties into mixed-use properties? Definitely. Actually, just yesterday, I signed a contract where we bought an office building in a B city in a metropolitan region where we will do exactly that. It's an existing retail building with one tenant only, and this one tenant is willing to give back some of the space, and we will convert it into a mixed-use building. And this is just our example. And I see it and hear it from so many developers in the big cities, but also in the smaller villages, because you have to, when retail as we knew it cannot survive, then you have to do something with the buildings. So why not bring food into town and make this the new shopping?
Yeah, I think it's interesting. I mean, one of the things that always strikes me around some of the discussions is when you look back further into history, you find that these challenges have often been the case. And certainly when both Selfridges and Harrods were opening, it was all about experience. You went in there to look and to be absolutely, it was supposed to fill you with awe going there. And I know that, for example, Harrods had a golf course on its roof. And it was the first time when Selfridges opened, it was very much that idea of you are allowed to come in and look. You can see it. It's an experience. And so it'll be interesting just to see how that changes. And also Sean Cooley as well mentioned in his presentation earlier on in the week. And if you missed that, you can catch up with that on demand. but just the transformation opportunities from car parking and from those other areas that give you that opportunity within shopping centres potentially to be able to reposition and change some of the uses. I wanted to pick up on just a couple of things. Looking at the challenges, really, because we've talked about some of the opportunities. What about some of the challenges? I mean, interestingly, on the politics front, I saw today that, political tension between the US and China. We'll still have, in terms of continental Europe and the UK, we've still got, Brexit will have to work its way out in terms of what happens with trade, but for sure, trade was down 40% in the first month. How are we seeing those? And I guess also the other thing is the increasing discussions, uncomfortable discussions around nationalism linked to vaccine rollouts and those kinds of things. How do we see that? Are there sort of broader challenges, macro level challenges, Thomas?
Well, definitely. I think you mentioned, I think we all survived Mr. Trump. So he's vanished from the headlines. So the US activities are vanished from the general headlines. So no breaking news anymore on BBC, positively speaking. Negatively speaking, I think, meanwhile, see it really sober. The Chinese overwhelming activities, the Silk Road on one hand, which we know, most of them, we don't know the Silk Road in Africa, by the way. So it's, let's say, challenging for us if you want to see it or try to want to see it. Anyway, but I think the geopolitical thing, Iran, Israel, this is still going on. We can deal with this on one hand. On the other hand, I think we become more and more, from a human perspective, more the consumer situation, so consumers, not the production activities anymore, but more and more the producers. So this is again what makes me more concerned. On one hand, the gap between super rich and super poor are getting closer together. There are of course more super rich, I know, but the general global welfare increase from different levels, of course. So it's going on, positively speaking. Negatively speaking, I see the vanishing of what we call the middle class. And whether you go wherever you go, Latin America, Germany, whatever, the middle class is under huge pressure. So you see my activities and my thoughts coming more from this social environmental thing, social democratic things, rather than the big politics. This is again where I see expecting the left-wing shift when it comes to residential on one hand. So caps and all these things are going on a little bit deeper more. But the big thing for our generation, the next 10 to 15 years, will be the rest of the world versus China, or China versus the rest of the world. And this is for me the big thing. The rest, it's nitty-gritty, saying this is a little bit provocative, but this is for me the big geopolitical angle we have to face, definitely.
Absolutely.
Sorry, Herman, did you want to come in on that?
Well, I mean, fully agree. And I think indeed, when we look at the political landscape, there were just elections in the Netherlands the day before yesterday. And I think key words for the upcoming, let's say, political context is, let's say, continuing polarization, city versus peripheral regions, upper classes versus lower classes, middle class under pressure, but also global blocks within the world. So polarization and also a fragmentation. I mean, most of the countries, including the Netherlands, also UK, we were always used to have 2 or 3 mainstreams within the political spectrum, and we live within the political society, basically having a kind of central ideology with central purposes, central ambitions. So it was pretty clear where those main flows were heading to. If you look, for instance, in the Netherlands with the elections, the number of political parties in parliament, an increasing number of one-issue parties. So obviously you see a fragmentation going on, which basically, of course, reflects the opinion in the society. But when it's about coalition building and compromising, you need more stakeholders to come up with that. And of course, that may lead to a further instability.
Good, thanks for that. Interesting that around the Dutch elections there as well, and they're also going to, there have been and will be general elections in Germany, I know, this year.
France is upcoming soon.
I wanted to pick up on one thing, just also harking back a little bit to Michelle's question there, which is technology, growing role of technology. We're obviously able to have this meeting now and then be able to share it across the world, in essence. People have got used to using this kind of technology. What does that mean? Does that mean less business travel versus leisure travel? What do we expect to see out of technology, really?
Well,
Anyone can pick that up.
I think one of the things, of course, the new normal, we didn't touch on it too much, but let's say the new COVID-proof normal. I think technology, prop tech, will be of enormous help in terms of health check, in terms of air circulation, in terms of many other items, that basically we have COVID-proof office working environments, COVID-proof residential environments, coming up, let's say, with an environment that after this pandemic, we can function back again in a normal way.
Okay, good. There was also an interesting point from Sean actually in his presentation, which was around sometimes how advances in technology can be hugely transformational for built spaces. So he particularly pointed out the lift or the elevator, depending on where you're watching this from, and that suddenly meant that you could go up, instead of it being 10 floors, you could go up to 50 floors should you wish, because it was a form of automated transportation. And his expectation that actually the growth in data, but also automated transportation, will particularly change things in terms of people being able to, use transportation as a mobile office as well, should they wish, because nobody actually needs to drive. Elements like that I think are interesting. And do we think that also means, an increased focus on things like data centers, which in a way are the logistics, the storage area, like you have logistics for e-commerce, for example, data centers in a way are the storage area for those. Do we see that as an increasingly growing area? That's to anybody really, but I can.
I think so. I'm sort of flipping that question. I think for me now, it's the time is the commodity as well. And that links with the data, because you need all this data to make our lives so much more efficient and effective. Because now we've got to have working out all different people's schedules of when people are coming into the town centres, trying to make it all work logistically with people as well to give everybody a great experience. Because the big one that we've seen with this change, technology is the enabler, but to give us all better quality of life. That's the big one. So that's all related to time and how we use our time effectively, so we can spend more time with the family. We can work, remotely at home, but also go in when needs be. But it all comes down to time planning, and technology is the one that has allowed us to work so much more effectively.
Good. And Tobias, I'm just interested to just see that one of the things that came through in discussions earlier was when you're looking at the logistics sector, but also at some of these technology angles, that life sciences would therefore grow, and that an increasing sort of focus on niche areas. So is logistics just e-commerce? Is it other forms of logistics? Does it also include cold storage? Does it include data centers? Do you think there's going to be this growing sort of focus on niche elements? Before we had residential, and now we've got residential, micro living, co-living. Is that going to be a focus where we're really targeting specific products for specific groups of people or occupiers?
Well, to be honest, I never asked this question myself. So what I see in the smaller locations and smaller cities where we are active is that we also see elements of last mile logistic. But I have the impression that the points you mentioned, that they are better located in the outskirts of bigger cities or in metropolitan areas, but not in the small cities where we basically look for properties. Because there, people are still living more or less in the good old world.
So this is very much for the new world. I mean, it's interesting that we've seen life sciences beginning to move into cities as opposed to being in life science parks outside, and that integration of infrastructure and real assets, I think, as well. There's around kind of 3.5 minutes left, so I just wanted to just pick up on a sort of last wrap, I suppose, which is in terms of the trends for 2020. which ones do you see as the most permanent and enduring, in a way, that will drive opportunity and growth? So I suppose in a way that's also the ones that will provide the most opportunities. Let's just start with you, Zoe. What do you think are going to be the trends that will stay and will drive opportunity in the real estate side?
What I'm seeing and how I look at the recovery is a K-shaped recovery for me. That's the big one. There's going to be winners and losers in this market. The ones that are winners and going to be on that sort of upward K-shaped curve there is the ones that are closest to their customers, that are quickest to move, the most agile, that are acting on information. I'm seeing some real sort of firepower starters companies really making inroads, and all that was during that recession, you see the companies that are making it are the ones that invest in sort of new product development and sales as well, and marketing. So it's, yeah, that's where I'm watching those ones on the upward trajectory, and there is going to be, you know, quite a few new innovations that we probably didn't realise and see.
Okay, great. 30 seconds for you, Tobias, on key trends.
I think one of the key trends will be making stock fit for the future. As I said earlier, there will come opportunities from semi-professional investors who are not in a position or simply not willing to make their property fit for the future, and that's where I see a big trend, a big opportunity for the future.
Super, that's great. Thanks very much. What about you, Thomas?
Well, simple thing, I think money flow from ECB will go on for the time being, a big framework, and then of course I see a heavily restructuring thing within all the asset classes. One will be really pushed by money, let's say the data centers, minor granular level, parking things, lots of things. On the other hand, the big game will be still office converting into something and resi into something which we will it's called then mixed use. Infrastructure, be aware of that. It's always the sign when the market is too hot, infrastructure stories come up. So please avoid the infrastructure thing, beside all the reasonable thing, by the way. This is again where I will look a little bit more deeper in avoiding these infrastructure gains for us, but also for the most parts of the industry.
Okay, we'll watch out for that. Thanks, Thomas. Herman.
Key trends, urbanization and digitalization. I fully agree with Tobias, making properties real estate future-proof. And that will go through decarbonization, and that will go through health, making the properties COVID-proof.
Great, thanks very much. Thanks very much for all of your thoughts there. Thank you for your questions and for joining this session.